Alibaba is set to release results on Thursday morning, and to prepare, we're going to do our usual breakdown of the consensus estimates. So this breakdown is actually a little bit different for Alibaba since they don't provide guidance, so we're not comparing the consensus estimates to guidance. Instead, we're going to compare the trends and growth rates that we use to get back to the consensus estimates to history to see if it makes sense. So if you'd like to download our model, it's available for free on our website, gutenbergresearch.com. Click on the Models tab, and then scroll down to Alibaba and click the icon to download. And while you're here, if you'd like to get a better understanding of how our modeling approach works, visit our Education tab and check out Video 1, which is an introduction to our financial modeling approach. So with that, let's get started. And there are a few takeaways from last quarter's earnings call that we should talk about before we get into the model. And the takeaways are really around the two main focus points that investors have. One being the increased in engagement of users, particularly on the mobile platform, and the overall increase in monetization that Alibaba is seeing. And then the headwind that the company faces with the weaker Chinese economy. So management had a number of things to say with regards to the weakening economy. First of all, they're seeing overall growth from a couple of sources, and they kind of explain this as a shift in the secular trends of the Chinese economy. So China's moving away from an investor-driven economy and more to a consumer-driven economy, which is actually a very favorable event for Alibaba, obviously. And then also China's moving away from manufacturing and towards a service-based economy. So a number of big changes that are going on there. And with this secular shift, management also explained that they've been seeing a couple of other trends. One, the expansion of the middle class, and two, this trend of younger Chinese who tend to spend more and save less than the older generation. So these are both very favorable potentially very favorable events for Alibaba. So they're focusing their strategy in aligning with those economic conditions, and they're also saying that their growth prospects are going to be mainly about a couple of different strategic or tactical decisions. One is making sure that their platform can reach the rural areas effectively, and they have proven so far that they've been able to do that, and they're actually expanding distribution centers out into more rural areas, which is very important. And then also the continued focus on globalization. So hopefully, if these trends continue and management can continue to execute on their initiatives, we would see a benefit of this through the GMV growth rates in the next couple of quarters. So with that, we're going to get into our model, and there's a few things that we should talk about how this model is set up first. So first of all, since this is a foreign company that's listed on a US exchange, similar to our Ferrari model, we actually model operations based on RMB and then translate those results back to USD for valuation purposes. Other than that, it's pretty much set up the same as our other Tier 2 models. So you can see the light gray headings represent future forecasted periods, and the dark gray represent the historic actual results. We have the income statement modeled on a GAAP and non-GAAP basis, followed by segment details down below, and then we have additional details for non-GAAP adjustments and some ratio analysis down below. One other thing that I want to point out here is that Alibaba's operations are just they reach so many different categories that it's extremely difficult if you try and model each one of those individual categories. So what we've chosen to do is to focus our future forecast periods on the China retail business, which is the majority of earnings. And then you can see that we segment the rest of the results the same way the company does. So you can see the China wholesale revenue, international retail, international wholesale, cloud computing, and other revenue. But rather than go into granular detail, which is just too difficult to predict, we apply a simple quarter-over-quarter growth rate for each one of those revenue lines. And then we've actually decided to keep the growth rate for each one of those consistent with the prior year. So this is assuming no expansion in overall growth. So for example, for the China wholesale business, you can see that in March of last year, It it shrunk by 1.6%, and we are keeping that same 1.6% decline in overall revenue from this December quarter. So we kept all of those growth rates constant just to make things a little bit easier. If you want to download this model and plug in your own assumptions for each one of those categories, please feel free to do that. So the other thing we should talk about is how the Chinese retail segment is actually divided. So for one thing, they still give us PC and mobile results, which is good. A lot of companies have actually moved away from that as mobile kind of overtakes desktop. I'm sure at some point Alibaba will change and start reporting just one segment and not disaggregate the results between mobile and PC. We saw Pandora did that this quarter, which is kind of annoying because we actually have to update our model at that point. But for the time being, they are giving that disaggregated results. So we are splitting the two subcategories out. And then the way that you have to think about Alibaba's results are kind of twofold. On the one hand, you have GMV, which represents the total value of all products and services on the Alibaba marketplace, whether or not any transaction settles. So it really represents the total potential sales opportunity. And then, and this is sort of what you would want to use to change your macroeconomic views of the Chinese economy. So if you think that the economy is going to be a little bit weaker, you would expect to see total GMV contract. And if you think the economy is going to expand rapidly, then you would see an expansion in the GMV. And then you can also play a similar type of idea where if you think more of the GMV is going to shift from PC to mobile, which is in fact kind of what we're seeing, then you'd want to have the PC GMV shift down and the mobile GMV become a larger percentage of total GMV. And that's what we've included in our assumptions for the next couple of quarters. Then the other side of the other side of the earnings for the China retail business is the monetization rate. And the monetization rate is just the actual revenue divided by total GMV. So as user engagement increases and Alibaba is able to capture more of the actual sales for all of these products and all of this GMV, then their overall revenue is going to increase. And that's a trend that we've been seeing over the past couple of quarters and that we would expect to see going forward as well. So for example, you can see that the total China retail monetization rate for March of last year was 2.2%. And in our model for next quarter, we're projecting 2.3% monetization rate. And that is kind of how you want to look at the overall trends. You compare them year over year or quarter over quarter. And we basically have input some assumptions that are having the total GMV shift a little bit to mobile. We're showing a decline somewhat in the March quarter. Obviously, after the December strong holiday quarter results, you would expect to see a decline overall. But we are seeing improvements in monetization rate overall. And based on these assumptions, we were able to get back to the top line revenue estimates in RMB and USD for the next 4 quarters. From there, you can move down the income statement, and you could actually take a look at each one of the assumptions that we made for every one of the OPEX items. We basically model each one of them as a percentage of revenue, so you can see in the ratio section here. And we tend to keep the trends in those OPEX items as a percentage of revenue somewhat consistent with what we've seen with historic seasonality. But at the same time, we had to get back to the consensus EPS estimates. And ultimately, what we used was the product development expense as a percentage of total revenue. That was how we essentially backed into this final EPS number. So since there are so many different metrics here with the Alibaba model, it's probably more important than other models for you to download and just take a look at each one of the metrics and make sure that you agree with this. And if you don't, if you want to have a model that steers away from the consensus EPS estimate, you could just change any one of these OPEX items, and you could see that the model is actually pretty sensitive to those changes. So you could put in some different assumptions for yourself and take a look at what the EPS estimate is for that quarter and then for the full year. So be sure to join us after the release. We'll update the additional details for the March quarter. And if management does give some sort of guidance. They haven't yet, but if they do start giving guidance, we'll put that in here as well. Thanks for watching, and good luck with the rest of earnings season.